Yes.
Mainly because of so many competing factors within this economy. But
yes.
having said that, yes, one of the things that we could, or the government treasury can do, is by backing up these green bonds.
Yes.
It actually gives that investor confidence that yes, this is something that yes, as a country we can adopt and take advantage of
yes.
world over, because it's around the globe, and see how far it takes us with
yes.
regards to putting the resources where they should be.
Mm-hmm.
Because the other question that has been coming up in the recent past is how green is green? You know, we've been asking that question.
Yes.
That is a subject of debate for another day. But so far so good. I think it's backed by Treasury. I think we can do well.
Yes.
Yes.
Question now for Bloomberg says that this green bond is actually underperformed. And I want us to get it from this perspective.
Yes.
We do know that the guarantors actually, we have a 50% guarantee in the money that you put in it, and the 50% guarantee also in the investment that you get into. That's exactly how it was positioned,
yes.
to draw in a lot of investors. They wanted to get a minimum of 2 billion shillings and a maximum of 5 billion shillings. So far, it received 4.26 billion. Bloomberg calls that underperformance under the pretext that there was a good guarantee of investment and also of the money that it is that you're putting into that. Would you say that this is an underperformance?
No, not really. Why do I say so?
Yes.
It's the first time we're doing this.
Yes.
And therefore, the whole, in other parts of the country, because see, this is something that basically just started around 2010.
Yes.
You know, in the other parts of the world. And I looked at South Africa. South Africa started it just a few years ago.
Yes.
They're the first country to actually to buy into the green bond.
Mm-hmm.
It's South Africa and I think Egypt. We are the third country, but the first one around this region.
Yes.
So giving it the first shot at this initiative, my take is maybe we give it some time.
Maybe we give it some time.
We give it some time.
Yes.
And we need to also do more education around it.
Yes.
So that the uptake also becomes, you see, there is no good investment without proper education.
Yes.
Because it's a relatively new venture within even the stock market
yes.
itself.
Yes.
And therefore, I do believe that more exposure, with more exposure means more uptake and more knowledge.
Mm-hmm.
And with more knowledge, we will see in the future probably, more resources getting raised within the...
Yes. Fred, this is another question that really stands out from this bond as well. Now, everybody, well, the green area that we're talking about is quite vast, yes. as we can see. But it's getting impact on the fact that Kenya's agriculture sector supports the economy. It's the biggest contributor to Kenya's GDP.
Yes.
But that's fine. But now, don't you find it a bit shaky that instead of just pretty much going into agriculture for agriculture, we're talking about student accommodation vis-a-vis green?
Yes.
Does it get a bit complicated to understand this morning?
It gets a bit complicated because that's the question you were asking. How green is green? We've raised the bond and then you're putting
yes.
it into
student accommodation.
Into student accommodation.
Yes.
Yet, when we discuss raising money and putting it in ventures that actually help mitigate climate change,
yes.
I would expect different arrays of opportunities.
Yes.
Because we were looking at, for instance, the BRT systems that we were talking about earlier on.
Yes.
You know, as a country, that we need to get more people using our public transport system, and that means less emissions into our environment. I would expect talking about more solar powered economy.
Yes.
Yes, because that is where we need to be.
That's where we need to be headed, isn't it?
Yeah, that's the
yes.
green energy that we need to be talking
yes.
about, to harness more. Because earlier on, even the government had actually introduced a policy that I don't even think they have implemented, where every household was supposed to have, a certain level of green energy.
Yes.
To its component of usage in the house.
Yes.
But that is by installing the solar water heating systems and all that. I would expect some of those discussions to come up. I'm sure they were in the report that was launched a couple of weeks or months ago. But for raising money and then we are going in a different direction, I'm yet to get that explanation properly.
Specs are a bit complicated when it comes to understanding it, because at the end of the day, there's this feeling that we are looking to peg green on the potent areas within the economy where you can get money.
Yeah. Then the other question we need to be asking is,
yes,
yes, this money we are raising it in the market, but on behalf of the government of Kenya and the Kenyan people. And therefore, we need to define what, as a Kenyans, what is that green we're talking about?
Yes.
What is our definition of green, and what are the priority areas that we've lined up as a country that says we will raise money, but put it here, because this is where we need it.
Because this is where we need it.
Not where the other guy needs it.
Yes.
And that is the question, because if we do not define our priorities as a country, then someone else will define those priorities.
Pretty much.
Yes.
Isn't it? All right.
That is what I'm seeing right.
That's exactly what's going on here. And we're just waiting to see exactly how this is going to perform. And once we get to see those units, therefore, and how they're contributing to green Kenya,
yes,
that's when we'll come back and say, well, this was really green, isn't it? All right, I just want us to move to another issue this morning. Okay, now, Equity Bank. No longer Equity Bank.
Just
Equity investments, no longer equity investments, it's just going to be equity. Good. Now, what we do know is that Equity Bank is actually unveiled a new look and identity in line with the company's ongoing plan to transform the business and expand its operations regionally. New identity represents the organization as a unified brand with one bouquet of products and services under one roof. It features equity without an entity name such as group, bank, insurance bank. While speaking at the unveiling, Equity Group CEO and Managing Director Dr. James Mwangi noted that the refreshed positioning follows an extensive 3-year process of rounding out its current and future customer segments. Let's listen to that, and then after that, we can get to talk about it. Beautiful.
Yeah.
As him going around talking about on exactly what their drive is and actually what drives their rebranding. Fred, companies rebrand, and the main issue here is not as to why Equity is rebranding. That companies rebrand, and that's not going to change the way in which that they do their business. No. Let's therefore look at exactly what is happening in the Kenyan economy vis-a-vis what drives this brand that Equity wants to stand by. Now, Fred, we do know that the cap on interest rates is actually here to stay.
Yes.
Despite what the Central Bank of Kenya governor really wants to happen. That's fine. We're not going to talk about it. Members of parliament have decided it's there to stay. But what we're seeing Equity doing now, in 2017, they actually came out and said, we are not now lending to the mass market. We've stopped. Because the way things are going, it's not good for our business. But it got to some point now where they changed, and that's why he's trying to talk about that, is that you have to do your business in the most legitimate way. And what we're seeing Equity Bank doing is actually running away from the treasury bills way to the mass market. Okay, let's talk about it. Now, the loan book is actually going negative to what other banks in the economy are doing. It's now expanding 17%, and we're talking about 46 billion shillings in expansion. If you look at it all the way to June and August, okay, we're talking about 320.9 billion shillings in 6 months ended June. That's big, and look at the way in which they're provisioning for non-performing loans. The non-performing loans stand at 8.6%. If you look at the industry, NPLs, they stand at 2.6%. And now it looks at that and says, why lend to the government at 8% when you can actually get 13% from the mass market? Did you think, therefore, this morning, even as banks don't want to give the money to the mass market, at the end of the day, there is a way to go around it, and the equity is actually proving that you can actually do it?
First of all,
Yes.
you know, one of the things you gotta give equity, formerly Equity Bank,
Yes.
is the ability and the what do you call the lioness
Yes.
to actually move into uncharted territory.
Yes.
Because when you look at Equity, is the former Equity Bank were the first to actually even go into the uncharted territory of the low end of the market.
Yes.
When earlier on back in the day, banks like Barclays, KCB weren't even lending to those to the unbanked at that, we call them the unbanked at that particular time. And as we look at what is happening right now within the economy, yes, I think Equity are in the right direction. They probably have decided that, yes, you see, this interest rate cap is here to stay anyway. And in as much as there are a lot of sponsored amendments that even I saw, I think 2 weeks ago,
Yes.
you know, being discussed in the House, this economy, we have to decide and say, yes, this is here to stay, let's work around it.
Yes.
Because it has proven before. When you look at the numbers, we discussed here couple of months ago that, yes, as much as the interest rate cap is here to stay, it doesn't mean banks. Banks have just shifted their operations or their ways of making profits into other segments of of their balance sheet.
Yes.
And that is not a bad thing. It's just the nature of the business. Now, going forward, also we have to remember that one of the things that we're seeing right now is a lot of mergers. There's a lot of NIC, CBA. We're now seeing KCB mopped up
National Bank.
Bank.
Yes.
And among other banks that are actually looking at consolidating their portfolios.
Yes.
For a bigger market reach, and also to utilize some of the assets that are available within the sector. And I'm thinking, yes, it's a good move. But then coming back to the question with regards to putting everything under one roof.
Yes.
Equity Bank, I even looked at the fact that they're moving into even DRC.
Yes.
You know,
They're now in Mozambique as well, isn't it? Yes.
And as an entity, you do not want to be selling 3 different brands.
Yes.
To 10 different markets within the same region.
Yes.
You're better off as one entity so that we can recognize you, the client can recognize you that this is Equity.
This is actually
the brand.
Equity that
Yes.
I'm talking about. This is the
Yes.
brand, isn't
Yes.
it? Yes.
In SIA, it ends here, and this is when you go inside Equity, you will get your insurance, you will
Yes.
get your mortgage, you will get this, and even that Equity comes with is the notion that their products are not as expensive as their competitors.
Yes.
And that, I think that's a selling edge that they're trying to push beyond the region.
Yes.
And still a good move.
Still a good move, isn't it? Now, Fred, Richie, if you can just allow me, now we do know that the government is actually pushing for this move. And I know you looked at it and you asked yourself questions around it. Now, Equity Bank, okay, let's say call it Equity. Wow, it's a struggle.
Yes.
Equity, if you're watching, it's going to be some time. Anyway, now Equity is actually looking at it like this. Look, the bank now actually just wants to borrow from commercial banks. And we're waiting for this controversial rule, and we're waiting to see when it's going to be effected. Because we do know they actually did remove the 50% borrowing level vis-a-vis the GDP, which we do know we are not even following now, and just replaced it with the figure 9 trillion shillings. So that's 9 trillion for the commercial banks in the country. And Equity Bank has not been focusing on this. They've actually been going the mass market way. Do you think that this ruling therefore comes at a better time when the other banks are going to wake up and realize, wow, Now we can't lend to the government. We got to think of better ways in which we have to realign ourselves again in the mass market. Is Equity going to have a step ahead? Because they're telling us that in a day, they're able to actually lend to the mass market 15,000 digital loans.
Yeah. Like you said it, the other banks are going to wake up.
Yes.
And Equity will be miles ahead.
Yes.
Because you've got to be at a position where the market trusts you. The market believes that, as you see James Wong is saying,
yes,
people want to relate to someone providing solutions to their problems.
Yes.
And what we see at the moment is a case where Equity is taking advantage of that.
Yes.
That we need to go out there and gain the trust of the mass market.
Yes.
And this is where the money is. You know, this is where the money is. The Mama Bogas have not changed, who used to bank with Equity, and
yes,
they still bank with Equity.
Yes.
And in addition to that, we are looking at a situation where we have the new generation coming into the banking industry.
Yes.
And I think the main focus, which I'm very sure is part of the segment, is how do we reach this mass market of young people who are willing to bank.
Yes.
Small amount of monies, but continuous, and they're buying several things across so many platforms.
Yes.
There's a very big market there that is untapped if you look at the mobile money market. And I think Equity, by even doing this rebranding, it's a way of ease of doing business to the next person.
Pretty much.
And also at the same time, capturing the unbanked, who are, you'll never see them in banking halls. But they actually
doing
money.
business, isn't it? They're moving money.
Yes, they
Yes.
transact, and
Yes.
they do so much. And I think that's why I'm saying with this move, it allows them to go into the enchanted territory.
Yes.
And by the time they will capture this market and dominate it, and everybody starts to see their books grow, then I think we'll be having the other team trying to rush in. But in my own opinion,
that will be already, Equity will be 20 steps ahead, isn't
yes,
it?
it's the same way they did
Yes.
like 10, 15 years ago.
Yes.
By going for the unbanked.
And they
It's
capture them.
happening again.
And they capture them.
Yes.
All right, let's therefore move to another topic this morning that I want us to talk about. Good. I don't know how much time we got to talk about this though. Now, Mitumba imports at 12 billion shillings. Now, I'm getting told this is the last topic that I want us to talk about this morning. Now, Fred, this is pertinent therefore because we have a government that is telling us, look, we are actually improving our textile industries in the country. And there is a focus to actually improve manufacturing. We've had proposals, Fred.
Yes.
Stop imports of second-hand clothing into the country. Don't bring them into the country, but we've seen that fall time in, time out. Does this figure, therefore, this morning, Fred, say, well, you cannot, therefore, revive your textile industries, I mean, let's talk about the manufacturing sector, if you cannot stop the imports that come into the country under the same docket?
Actually, it's very true.
Yes.
If we are to actually be serious about manufacturing,
Yes.
as a part and parcel of the Big Four agenda, then we need to see policies lined up in that same sector
Yes.
to actually promote it, to promote our fabric industry, to promote our leather industry. But we are not seeing that happening. We only see that on speeches that we want to promote manufacturing. Yes. Now, but at the same time, there's a lot going for us in this country because we have a very big young population that are trendy and want to that have some little money. They buy clothes, they buy shoes, they buy belts, they buy all manner of things. And when you sum up all that, you find that figure. There's money moving in the economy, and this money is going into mitumba clothing. That means that we basically continue the trend of not promoting the sector,
yes,
but then resorted to the short-term gain of actually importing already used clothes abroad, which in my opinion should have stopped like 10 years ago.
Yes.
You know? So if we really wanted to stop this, because if you look at Uganda, you look at the Uganda economy, these people actually do not participate so much as we do.
Yes.
In importing clothes, because they design yes. their own clothes.
Yes.
They actually sell their own merchandise, and they've been promoting their own textile industry for the longest time.
Yes.
Because even as a country right now, we import some of these numbers actually go into Uganda, our next door neighbor. So what do we need to do as a country? Yes. I've seen the government realigning resources towards reviving the cotton farming, the factories like the one in Eldoret. I'm told the one in Kisumu, the Kikomi one, is supposed to be revived later on. But then the question would be, how long do we need to take before we actually get this industry moving?
Yes.
That's the question that no one seems to be answering. And if you go down to where the rubber meets the road, you find that nothing is happening there. There's nothing going on, and that's a cause for concern. Because this is where we can mop more young people into the job market. And therefore, that means that this money, instead of us taking it outside, we can retain that money here, create more jobs, and these people will pay taxes, and that's how we even grow our books as a country.
Yes.
But we don't seem to be looking at it in that perspective. We seem to be going for the easier route.
Yes.
But then the other question that we need to, even Kenya needs to answer is, yes, we really need to interrogate the AGOA.
Yes.
That intertrade between that was given by the US to the Kenyan, for instance, Kenya, Rwanda, Tanzania. We really need to interrogate those clauses and ask very pertinent questions. One of them being, who is AGOA benefiting?
Yes.
Is it us or is it the US?
Is it the US?
And we need to run those numbers and ask ourselves, if you're not benefiting from it, then we need to realign our resources towards promoting our local textile and leather industry.
Yes. All right, for 30 seconds really, because we need to be out of the studio by now. I just want you to tell me exactly, 30 seconds really, government agencies again in the sport and Kenya Pipeline. This is the first time that we've seen it in the sport. This is not going to be the last time that we've been seeing it in the sport. Now, this morning, Fred, it is 2019. Government agencies are business. What will be the magic bullet in solving our problems when it comes to government agencies? 30 seconds, Fred.
Well, I think we need to be serious. You cannot have a case in court, but then again, on the other end, you're moving your books towards allocating a budget line to a case that has not been determined. It's everything points towards corruption there, in my own opinion. And we need to stop taking the taxpayers for granted.
Pretty much.
Yes, let's be serious about running this country, because 4.3 billion can do a lot.
We can't say any further. Good. Today, 3 p.m., your markets will officially close. But that doesn't mean that trading will have stopped. What Metropol TV is going to do is that we shall traverse the economy for you over the weekend, just like we've done again here with Fred. And once we come back Monday, the information shall be with you. Fred, thank you very much for joining us this morning, man.
Thank you.
Always a pleasure
Thank you
to talk to you. All right. We take a short break. Once we come back, what is the strategy therefore for executing a winning business strategy after this?
transport has been a major driver, air transport has been a major driver in Kenya's economy, boosting tourism, attracting regional headquarters of multinational companies, and fostering trade, logistics, and foreign investments in this country. When it comes to visa openness, Kenya ranks number 12th globally, with more than 4.7 million passengers arriving to Kenya's airports every year, and the country's established position as the leading cargo hub for East Africa. There is good reasons to be proud of all aviation has achieved in this country. In fact, IATA has recently published a study on value of aviation for Kenya, and the numbers speak for themselves. In 2017, aviation and tourism contributed $3.2 billion in the GDP. It accounts for 4.6% of Kenya's GDP and supports for more than 400,000 jobs in the country. However, over the next 20 years, Kenya markets could more than double in size, resulting in additional 11.3 million passenger journeys, over 449 more jobs, 449,000 jobs, and 11.3 billion boost to the GDP in 2037. But to continue this growth and to make it sustainable, IATA has identified 4 key areas where government actions can promote aviation growth and bring even more value to Kenya. Number 1, continue to improve air transport infrastructure to accommodate the future growth of air traffic in collaboration with users. Improving operation efficiency at the national airports in Nairobi remain a competitive connecting hub and East Africa main cargo hub. Number 2, implementing a single African air transport market, SATAM. SATAM will open Africa's skies, we all know this. We welcome Kenya's commitment to SATAM and urge the government to implement SATAM by making its regulatory framework statutory. Continue to improving safety and performance of Africa. Turboprop fleet remains a priority, including in Kenya. The IATA Standard Safety Assessment Program, called IASA, enhances and complements the state safety oversight role in this respect. Last but not least, adapting new innovation and technologies, integrating technologies such as biometrics, artificial intelligence, and the likes will improve efficiency and passenger journey experiences.
A very good afternoon to you from wherever you're watching. It's time for Business Boost right here on Metropol TV. My name is Nina Shaban. Now, KCB Group PLC has listed an additional 142.9 million shares at the Nairobi Securities Exchange following the successful acquisition of the National Bank of Kenya. Effectively, NBK shareholders who swapped their shares for those of KCB will now freely trade the new stocks at the bourse. Now, KCB got a consent to acquire NBK from shareholders holding 297.1 million issued ordinary shares out of the 338.7 million issued ordinary shares, representing an 87.7% by the offer closure date on the 30th of August 2019. This brings to the total 3.2 billion, the number of shares the biggest bank by asset base in Eastern Africa has floated at the NSE. While speaking during the bell-ringing ceremony to commence the listing of the new shares at the NSE trading floor today, KCB Group Chairman Andrew Wambari Kairu, said that the listing will enhance the vibrance of the capital market and will be instrumental in fueling continued business growth and the execution of the bank's expansion plans. He further said that it will provide more shares and therefore liquidity on the counter, allowing more investors to be part of the bank. The NSE chairman, Mr. Samuel Kimani, addressed the fact that the listing will create additional value to the KCB shareholders and boosting overall market participation. KCB has started the process of integrating NBK into KCB, and an exercise that is expected to be completed within the next 24 months, focusing on systems, processes, people, and institutional governance. All right, moving on swiftly. Kenya's private sector activity grew for the fifth straight month in September, boosted by an increase in new orders for businesses, a survey has showed on Thursday. Now, Market Stanbic Bank of Kenya Purchasing Managers Index PMI for manufacturing and services rose to 54.1 in September from 52.9 in the previous month. Any reading above 50 indicates growth. Private sector activity is showing signs of momentum, although panelists continue to highlight cash flow issues that they face, said Gibran Qureshi, the regional economist for East Africa at Stanbic Bank. The rate of new business orders was the strongest in 13 months in September, the survey found, and although output among firms grew modestly due to the cash flow concerns. Staying in the corporate sector, Renault Trucks has opened a local assembly plant in Thika as part of the expansion strategy in Kenya. The move follows the establishment of a long-term partnership with the local exclusive importer CMC Motors and unveiling of their C and K ranges in Mombasa and Nairobi. The plant will see that the company and CMC Motors create over 200 new jobs with additional opportunities to be generated across the value chain. Cyril Barilla, the vice president for Renault Trucks Africa, has said Renault is seeking to strengthen its position as a key player in East Africa's automotive industry. The French firm has also established a regional training center that will allow Kenya to become a regional hub for the Southeast African region. Renault Trucks has a presence of over 100 countries. Collaboration and cooperation is the future of the media industry, both globally and locally. This is according to the British Broadcasting Corporation Director General Tony Hall, who made the remarks during a cocktail meeting between local journalists drawn from various media houses in Kenya and the BBC staff from the other parts of the continent. And the Hall stated that BBC's commitment to the collaborating with local media houses to create content that relates with and feeds into the information needs of the local people. He also lauded journalists for always risking it all in the quest for the truth to ensure viewers are kept in the know all through the objective reporting. South Africa and Nigeria signed 30 trade and cooperation agreements on Thursday, weeks after a wave of violence against Nigerian nationals in Johannesburg and Pretoria had strained relations between Africa's top two economies. In September, mobs armed with makeshift weapons attacked businesses and homes owned by foreigners, leading to at least 10 deaths, dozens of injuries, and up to 400 arrests. In response, Nigeria repatriated around 600 of its citizens living in South Africa. Presidents Cyril Ramaphosa and Muhammadu Buhari, at the conclusion of a two-day visit by the Nigerian leaders, said they regretted the violence and subsequent retaliation in Nigeria against South Africa businesses and pledging instead to deepen trade ties. The local units of South African telecoms company MTN and supermarket chain ShopRite closed all stores and services centers in Nigeria after their premises were attacked by Nigerians protesting against the attacks on their counterparts or other compatriots in South Africa. Ramaphosa said the two countries had sealed 32 bilateral agreements and a memorandum of understanding covering trade and industry, science and technology, defense, agriculture and energy. Nigeria accounts for 64% of South Africa's total trade with the West African region and is one of its largest trading partners on the continent. Buhari said beyond the economic partnership, the anti-foreign violence had to be addressed quickly. All right, so thank you so much for keeping it Metropol TV. That's it for Business Briefs this afternoon. My name is Nina Shaban. I'll be joining you later at 7 p.m. for our primetime news. So enjoy your afternoon till then.
We are live on Facebook at Metropol TV Kenya. We are live on YouTube at Metropol TV Kenya. The hashtag on Twitter is hashtag BusinessAM. Get talking to us. I'm at Charles_Kiage. Wow. Now, if you don't know, when it comes to business, there are a lot of factors that go into the success of a business. And anybody will tell you that if you are a business person, then one of the strategies or qualities about you is that you have to be an ardent reader. You gotta listen to whatever is within around you or next to you or around you. And that's the only way in which you're going to draw in lessons that are going to help your business grow. And therefore, I am thinking that any business person will therefore get drawn to books around crafting a winning strategy, profits, coming out of the red, losses and all that. Any text that talks about how to make your business better. And so this morning in the studio, we are privileged to be joined by Dr. Mary Mugo, who is the author of this book that I have here, The Winning Strategy. Dr. Mugo.
Thank you.
Thank you very much for joining us this morning.
Thank you for having me.
All right, I didn't go through your CV because we could have spent some 5 minutes on it, isn't it? Mm-hmm. But the question that comes from your CV this morning is because I know you've done strategic management. I know you've done leadership courses. I know you're into marketing. I know you're into your consultancy as well. Let's just leave that aside. Mm-hmm. How did this experience, therefore, actually get to you to come up with a winning strategy?
Yeah, thank you very much. The push behind coming up with the winning strategies, I discovered that many times business people just start things without thought.
Yes.
I also discovered that many times business people come up with strategic plans, but they never implement them. And therefore, this book is supposed to help a business person not just craft a strategy, but ensure that that strategy goes up to the end. If you check even in the country, in the counties, they have a lot of, they spend millions of shillings to come up with strategies. The question is, why is it that those strategies either don't work or nobody knows where we are? So what motivated me to do this book is to help businesses understand how do you ensure that your strategic planning helps you to achieve your results.
Yes, which comes at a proper time, Dr. Mugu. You do know what's happening within the economy right now. I mean, companies are trying to figure how to remain profitable. Businesses are making losses. We're actually going through cost-cutting measures in most of the sectors of the economy, therefore. And I want you to have a critical look before we get into the winning strategy criteria. I just want you to tell me, when you look at the Kenyan economy and in the way most people run their businesses, what is the key element they're missing or they ought to know?
Yeah, I think the economy is never bad for all businesses.
Yes.
The question is, are you doing the right thing? For instance, you see many businesses today look at what we call red ocean strategies, where basically what you're looking at is you want to beat competition.
Yes.
But you need to look at what we call blue ocean strategies. What is it, which area is uncontested? And then look at that particular area and create your own business.
Yes.
So many people, why many businesses today are struggling is because they want to do what everyone is doing.
Yes.
That is why everyone is always talking about we want to benchmark with this company is the best. The question is, why can't you be the benchmark? Why can't you be the one that is doing something that is so different, what we call blue ocean strategy,
yes,
and come out and then people benchmark with you? So I think the economy may be bad, but if you have the right strategy for the right thing,
yes,
then you succeed. Because again, we say, which is in the book, if you remove a fish from the water, it will die.
Yes.
But if you put it in the water, it will swim very well.
Yes.
So the question is, are you doing the right thing? Or you're just doing a strategy because everyone else is doing it, I do it, I'll succeed. So for me, the key issue is, are you able to do the right thing for your business? Do you understand the environment in which you operate? Because again, if you have the right strategy but the environment is wrong,
yes,
you will not succeed.
You will not succeed, isn't it? All right, let's therefore talk about the winning strategy, and we're going right into it, isn't it? All right, let's start therefore, Dr. Mugu, for anybody who wants to get into this book. And I know we're not going to talk so much about it. We are going to just brush through it. All right. So what is this criteria, therefore, that people have to know before carving out this winning strategy?
Now, it is important to understand as a business person, the first thing any business must do is to come up with a vision. The vision basically tells you where do you want to be in the future. Many times the business people combine the vision and the mission. Mission is why do you exist? Now, when you come up with a vision and mission, the other key thing that you must come up with is that you must analyze, or what we call scan your environment. Because if you don't understand your environment, then your strategy may be wrong. And when you say you scan your environment, you're saying that you want to see what are your strengths as a business. We don't call them weaknesses these days, we call them challenges.
Yes.
What are the challenges that your business is likely to face? What are the opportunities that the environment is bringing to you? What are the threats? When you do that analysis, then you do another analysis we call the external analysis,
yes,
the political analysis, the legal analysis. And you'll find that, for instance, you can have the best strategy, but by the time you implement it, the legal aspects have changed. So you must continuously analyze your political environment, your legal environment, your technological environment. For example, even in the media world, now people are streaming, live.
Yes.
So if you stick to just one way, then there's a problem. After you analyze your environment, the other thing that you do is now you formulate your strategies. Now you realize many businesses formulate strategies before they even scan their environment.
And that's a big disconnect, isn't it?
Exactly.
Yes.
Exactly.
And you have to know that, isn't it? that you cannot formulate your strategies before you scan your environment.
Very good. You are a
Yes.
good student of strategy.
Yes.
Yes.
And so what are you bound to miss, therefore, if you start formulating your strategies before scanning your environment?
When you formulate your strategies before you scan your environment, what is likely to happen
Yes.
is you'll have the wrong strategies. Because as I said earlier, for example, you may say that this is my strategy, but by the time you implement the strategy, the environment has changed.
I see that.
Yeah?
I see that.
Yeah, so after you formulate your strategy, you implement them. Now, that is where the problem is. Some people do the first three very well, but implementation is the problem.
Yes.
And it is very important for you to know, how do I implement my strategies? And how you implement your strategies, you must come up with what we call strategic objectives.
Yes.
What is it that you want to achieve? Because you'll only be able to tell that you are implementing your strategy by looking at your objectives. Then the other key thing which many businesses miss is monitoring and evaluation. How will you know that your strategy is working? Many of us do a good strategic plan, put it there, and say we have a beautiful strategic plan, and we spend millions of shillings.
Yes.
But the question is, are you monitoring that? Now, monitoring is continuous. Evaluation is at the end. So you must continuously monitor your strategy so that you know, do I need to change? Because things are changing. The environment is changing.
Yes.
So if I had a strategy that was saying this now, and the legal aspect, for example, has changed, or the technological aspect, then the question is, what do you do? So monitoring is very important, and I think that's where most of the businesses fail, that they have the best strategies, either they don't implement them well, or they implement but they don't care to monitor and see whether
Yes.
those strategies are working.
Yes.
Yeah, so that is the process of how you plan and craft a winning strategy.
Yes.
Yeah.
And I want to ask you this morning, because anybody listening to you, and for me, every time I speak, then I'm speaking to that youth outside that was really thinking, where do I plug myself into this space? So but out of all these strategies, therefore, which one should somebody start with? Because at the end of the day, somebody's going to say, I got to start somewhere, isn't it? So which one do you recommend for somebody to get into, stick to it, before you move on to the next one?
Now, I normally advise you, there's a consultant or any other person.
Yes.
You know, I normally say that it is of no use to do something so well that you shouldn't be doing in the first place. You can imagine, I'm coming to Metropol this morning, but I decide I am going to go very rude, and I'm really speeding. Will I get to Metropol? No. So that is where the problem is.
Yes.
You cannot start a business without a plan.
Yes.
Because basically you can easily do something useless so well, but at the end of the day it takes you nowhere.
Yes.
So the first thing that you must do, whether you're young or old in business, you must have a plan. Where are you going? Because we say, if you don't know where you're going, any road can take you there.
Yes.
So the only way you can have a winning strategy is first to understand, where is it that I want to go?
Yes.
As a business. Because even in media, you see there are businesses that specifically are business oriented, others are entertainment oriented. You can't, and this book actually says that you can't be everything to everyone.
Yes.
So you must understand, as a business person, what game do I want to play? And in strategy, we say that make your own game. Why do you want to play other people's games?
Yes.
And the only way you can play your own game is to know where exactly you're going.
Yes.
Yeah.
And I want to ask you this question, is really pertinent now. For I know you've been into consultancy, you're still there. So when you look at some of the businesses you're actually offered consultancy services into on an aggregate, what would you say are they missing? Because the businesses are there, but talking about performance, therefore, is that they're not winning. And that's the most complaints that we're getting in the economy right now. Is that we have businesses, we've followed everything that it is that we're supposed to follow, but we're not cutting even, we're not breaking even. What do you think is the main component for the businesses that are missing within the economy?
I think what most businesses are missing is because they think winning is only the bottom line. You see, strategy is not about the bottom line.
Yes.
For you to see that you're winning as an organization, your bottom line should be right, yes,
Yes.
but your people must also be happy.
Okay.
Then your customers must be happy. So I think what the businesses are missing is because they are always looking at the bottom line. They forget, which is also in this book, that culture and leadership is critical if you have to win.
Yes.
What is the culture of the organization? Do the people feel that they belong to that organization?
Yes.
Do the people feel that they are part of that strategy? Because when you're coming up with a winning strategy, what we call grassroots approach is very important.
Yes.
The people need to be the ones that are actually coming up, telling you this is what we think we can do. And I've always said that many times the people down there have actually the answer to your problems in organizations. If you read books, you will see that best ideas have always come from not the top, down there.
Yes.
So I think what many businesses miss is they sit down somewhere in an office with a consultant and come up with a strategy and put it and push it down the throats of the people. You need to come from down. Ask the people, what do you think we can do for this business to grow? But you know, that cannot happen if the culture is not healthy. So the culture is key for you to win.
Yes.
Of course, the leadership is also very key, because the leadership is the one that creates that culture of feeling that I'm wanted in this place, that I'm not here to work because I want a salary. I'm here because we need to grow this business.
Yes.
If a leader can get the people to buy into that idea, you will definitely win.
Pretty much, isn't it?
Yeah.
All right, I just want us to do exactly what we do here on Business every day that we're reading a book, is that we're going to open this book, right?
Yeah.
Randomly read a paragraph, and then from there, we get somebody who doesn't know about the winning strategy to actually come on board and actually get talking about the winning strategy. Good. Now, I'm reading from page 76, all right? Point number 2. It's called the GE business model.
Yes.
Now the GE, that's the General Electric model, is a strategy tool that offers systems approach for multi-business corporations to prioritize its investment among its business units. Now the model uses industry attractiveness and the competitive strength of a business unit to help management make investment and decisions. Now the model identifies 3 categories of investment or divestment, namely invest, hold and invest, or divest. Big words, Dr. Mulgo.
Yes.
Let's break them down.
All right. Now, what basically this means, now you need first to understand that this is a model that you use in what we call a portfolio analysis.
Yes.
Every business has specific business units. For example, there's a model that uses, there are other models that are in the book. But basically, the GE business model says that as a strategist, you need to know when to invest in a business unit, when to hold into that business unit, and when to divest. Now, what basically that means is that you give resources to any business unit that need investment, meaning you can invest in that business unit to grow it.
Yes.
Okay? So you must be able to look at all your business units and prioritize, because you don't give all business units the same amount of resources.
Yes.
As from a strategic point. Then there are others that you just hold any investments. They can be on their own. You don't need to invest anything on it. But a good strategist also appreciates that if something is not working, just divest. You don't stick on to something that you're sure it is just getting your resources, it's just depleting your resources.
Yes.
So it is important for you as a strategist using this model to understand your business units. Which business units are we supposed to invest in? In another model, those would be called the stars.
Yes.
Those are likely to grow and become cash cows where now they give you the money. But there are others that you hold to because they are promising and they seem to have a future.
Yes.
So you hold on to them. But there are those others that even if you put all your money, they are not going to do anything. So you harvest, you divest.
You divest, isn't it?
Yep.
Now you don't understand exactly why you need to read this book, because the new terms there and the explanations there that you need to understand, especially when it comes to unlocking the potential of your business and also understanding what is working out and what's not working out, isn't it? All right, let's therefore talk about this. The winning strategy. Who does this target?
Now, when you're doing the strategic implementation,
Yes.
the phase of strategic implementation, I say that you need to come up with strategic objectives.
Yes.
Now, the person who comes up with the strategic objectives, if you want to win, should be the department person with their people.
Yes.
So the objectives should not be from top. The top should have what we call the corporate strategy, that
Yes.
this is where we are going.
Yes.
Then from the corporate strategy, we have what we call business strategy. Business strategy is at the level of the department. So at the top, they tell you, just for example, they tell you want to grow a business by 10 billion.
Yes.
And we have 5 products. So you say each of these products, this is their contribution. So the person in charge of each product should come up with objectives in consultation with the people under them, so that they feel they are part of the strategy. And then after that, there's something we call functional strategy. Now, functional strategy are the guys that now do the implementation aspect, the human resource, the support, the finance guys. So the people who really should come up with targets and objectives are the people that actually are doing the real work.
Yes.
I think that's another place that we miss.
Yes.
That someone at the top tells you that basically you must sell this. And by the way, before I went to teaching, I worked in the private sector for many years as a marketing director.
Yes.
And if you want to succeed in the areas of targets, let the people below set for you targets and tell you, I think I can sell this. Then discuss together and agree, yeah, let's maybe go higher or lower. Because again, if this book tells you that your objectives must be C-SMART, challenging. C stands, most people know SMART.
Yes.
So we've added C.
Yes.
They must be challenging, because again, we say if the people are not challenged, they don't feel useful. But now these days we are even saying they should be fast. They not just be C-SMART, but they must be fast, meaning we must frequently discuss them. Frequently discuss them. So targets must be set by the people that actually are doing the real job, not the top.
No, the top.
Because if you say at the top, many companies, people will tell you those are the bosses. They don't know what is happening down here. So the people who are on the ground should actually be setting the targets.
Pretty much.
Because at the end of the day, they are the implementers. Yeah. And when you set a target, from experience when I was in the private sector, it's very difficult to go back and say that I realized I didn't set the right target. You'll do your best to hit your target.
Okay.
Yeah.
Let's have a talk about the winning strategy. How can they get this book?
The winning strategy book, you can, 1, it is in Jumia.
Yes.
2, it is in Amazon.
Yes.
3, you can get it from me.
Yes.
By calling 0733 297 287, or you text. We'll call you and we'll deliver where you are. We've delivered this book to Hola, to Kapenguria, to Eldoret, to Nakuru. Yes.
Pretty much. If you want the winning strategy, you can also actually get in touch with Metropol Television. We can actually link you to Dr. Mary Mugo, right? And you can actually lay your hands on the winning strategy. She says that the people who actually need this book are the people within the departments. Those ones who are driving the sales, not the corporate up there, isn't it? All right. That's why it's very important, if you run your business and you're actually in the business of selling, scaling up, this is for you. Good. That's exactly the conversation that we had this morning. Now you do know why you need the winning strategy. Good. All right. Now, this conversation, you can actually recap it on Facebook and YouTube. You can actually just type in Metropol Television. You can actually get to know some of the definitions of what we are talking about in the winning strategy, and also you can get a recap on exactly how and when you can get this book by Dr. Mary Mugo. Good. That's the business I am for you. My name is Simbalaja Charles Kiage. I'll be joining you at 11:12 for Metropol Business Briefs, and then later join you at 1 p.m. for Metropol News at 1. Good morning.
Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. It's a very active and exciting day on the Nairobi Securities Exchange. We will be giving you an update of what is happening, what are traders doing on the floor today, what are the top traded counters. Over and above that, it's also been an interesting day with regards to corporate actions. NIC and CBA are nearly towards the tail end of their merger. The new entity is now called NCBA. You will no longer hear of NIC or CBA as separate entities. That is now NCBA. We'll be giving you an overview of how we've gotten to NCBA from NIC and CBA, and more importantly, for you as an investor in NIC, what should your considerations be at this point in time, and where are we coming from with regards to shareholder value, and also when do we expect the new shares from this merger to actually come onto the market. With regards to additional corporate news, we'll be giving you an overview of the success of Kenya's first green bond, how much has been raised, and what will this money be used for. Over and above that, it's Thursday and we're always trying to understand Investing 101, going back to the basics. What should your considerations be? If you have been following us for the last couple of weeks, about 4 to 5 weeks, each and every other Thursday or Wednesday, we take a simplistic view with regards to investing on the NSE and try to understand what are the successful behavioral tendencies that we need to be able to adopt to be able to make a return, whether it's on investments on the NSE or in other sectors. Today, we're trying to understand what are the price triggers that you need to look out for when to actually get into a stock, to get into an investment opportunity, and conversely, when would be an appropriate time to get out of this investment opportunities. We will be looking at the NIC-CBA merger as a baseline to understand what were the trigger points, what has happened with regards to price, and what to expect going forward. Over and above that, we'll be hosting Mr. Robert Yahweh. He's the Managing Director of Syntex Solutions. He'll be telling us what should your considerations be when you're investing. What are the things to look out for when you want to get in? What are the things to look out for when you want to get out? And as always, we always say you need to own your own investment journey. Now, coming back to the corporate actions of the day, we will be putting up a timeline of what is happening on NIC with regards to the share. Before we go to that, on the NSE, we've had a lot of action today on the banks. 5.4 million shares traded on Equity Bank, 5.4 million shares also traded on KCB Bank. As at yesterday, Equity was trading at 37.25 shillings. Overnight, it did come out with a new brand name with regards to its entire entity, the Equity Group. It has a new brand and it's a house over and above the Equity name. And this actually culminates and amalgamates all the entities that are affiliated with Equity Group. That's not a major corporate action, but we have seen a lot of trade interest, and 4.4 million shares has traded over the day with a reference point of 37.25. KCB, also another share that has traded 5.4 million shares. It did close at 42.25, and that's the range we've actually seen it trading on the stock today. It's been a banking day, a lot of interest there. We also saw a bit of housing finance go through the market yesterday. A million shares were traded at about 7 to 7.05 shillings per share. Now, yesterday we were recounting and seeing, are there opportunities to actually get an upside with regards to the fourth quarter on the NSE? Housing finance did come up. We will be looking at the NCBA merger and see, are there any points of landing that we can actually glean from this to see if there could be upside on housing finance. We track the NIC Bank share price. Today, they actually launched the NCBA new entity, and this is NIC, which has merged fully with CBA. Central Bank of Kenya did last week on the 27th come out and say that they have approved this particular merger. We are awaiting dates for new shares to be issued into the market. About 789 million shares are expected to come onto the NSE with regards to the NIC share. The question is, do you expect a dilution or a price correction upwards with regards to the share price, which is actually at about 31.50 shillings per share? But before we tell you whether to buy or sell or do nothing on the stock, here's an overview of what has been happening with regards to the NIC Bank share price. Before it actually came to the market, and that was on the 6th of December, and it came and said that they were considering a merger with CBA, the price was 22.65. On the 6th of December, NIC put out an announcement and said that the board had given the green light for discussion discussions on with regards to the merger to take effect. On that day alone, that's December 6th, on to the next day, December 7th, we saw a huge uplift, 32% price jump on this particular stock from 22.65 to 30 shillings over the day. Certainly a very material announcement that was made on that day. And then we also saw a trajectory from 30 shillings all the way to a high of 40 shillings. And this was on Feb 21st, 2019. If you'd actually bought the share on the December 6th and waited up until February 21st, you actually made a 76% gain if you actually entered and exited the stock at that point in time. What are the key considerations that were happening here? Between the two price points, there was the announcement of the intention to start the conversation of the merger. Secondly, both CBA and NIC boards approved the merger and they got the green light to go ahead with the merger, and then details started coming out to the market with regards to what to expect. The other price points, after touching a high of 40, it came down to about 29.5 shillings, and this was following the Competitive Authority of Kenya approvals. And this approval was very important to say that there would not be an entity that's dominant in the market and therefore stall this particular transaction from happening. The final approvals that we have seen come out today, last week, September 27th, CBK, that's the Central Bank of Kenya, gives the full green light, and also a new name for the entity. NCBA is also approved. Today we are at about 30.931 shillings. We look at the other timeline and key events that you need to look out for in the next slide. Okay, we will await our graphics team to put up the next chart, and we're looking at the dates. Okay, so you have an outline of the dates that we've just discussed. 6th of December 2018, the merger discussion commences there in December, and that transcends. You have the board recommendations for the merger of the two banks. You have the CBA and the NIC shareholders approve the merger. Competition Authority and Central Bank of Kenya approve the merger. The key date that you need to be looking out for now is the 22nd of October. Today, at the launch of the NCBA, the new entity, which is the NIC and CBA merger, the management team did allude to the fact that they're expecting to list the new shares onto the NSC on the 22nd of October. They await NSC, that's the Nairobi Securities Exchange, and the Capital Markets Authority approvals. We expect about 789 million new shares to be listed in addition to what is currently on the stock exchange. If these new shares come into the market, you'll have a total of 1.5 billion new shares under the NIC entity. The question is, what are your considerations at this point in time? Two numbers that you need to look out for. Let's go to the next slide and probably just get a sense of what numbers we need to look out for. And that would be the book value. Our graphics team will give us the next slide. The book value of this particular entity and whether it's trading at a discount to the market or not. All right, that's a timeline. We've already discussed this timeline in terms of what is happening with regards to the merger. Let's go to the next slide, which shows us the financials that we are looking at. So you actually have NIC CBA, now known as NCBA, becoming the third largest bank with regards to assets as well as deposits. And that will have, the combined entity will have 447 billion worth of total assets. It will have 334.9 billion with regards to deposits. When we're looking at the entity that is on the Nairobi Securities Exchange, this value here, the combined shareholder funds, is the most important number that we need to be looking out for. This is 66.7 billion. As at half year, NIC Bank as a standalone had a shareholder value of 37 billion. In other words, what was the price to book value that NIC was at before it actually completed its merger? At 66.7 billion, if you compare this to the number of new shares that are expected to be in the market, and that is 1.5 billion, you get a price to book value, a net asset value per share of about 44 to 46 shillings, depending on the base that you're using as a reference. 44 to 45 shillings means you're comparing this price to the current price of 31 shillings and asking yourself, do you think the market can actually rally to this particular price, and is there an opportunity for you to actually get some upside? In other words, from 31 shillings, should you be buying or selling the stock? We think that there's a good consideration to actually buy the stock if you do not have it, because we can expect to see a slight ramp up from up to 40 shillings or 45 shillings based on the book value of the merged entity. People have been talking about a discount, but we don't see a discount because you're having a new entity that is moving from a shareholder value of 37 billion to 66 7 billion once this new entity is actually amalgamated and merged with regards to their financials, and you have an entity that's moving from about 750 million shares to 1.5 billion shares and creating shareholder value of 44 to 45 shillings from a current price of 31. In other words, or rather put simply, this is potentially a company that's trading at between 65 to 70% discount to its potential value in the short term. There could be some upside with regards to price, and you need to be cautious when you're looking at this particular counter. Do your analysis and look out for any cautionary announcements that are made by this company. The key days, however, that you're looking at 22nd of October, and looking out for any announcements from the Nairobi Securities Exchange as to when to expect these new shares. So enough of talking about the companies and what is happening there. Let's come back to the element of you as a shareholder. If you had been tracking this stock, when should you have actually come into this number, to this counter? When should you have gotten out? There was an opportunity to have made a return of 75% return in 3 months. That's spectacular when you're looking at a market that is actually down almost 8% from the beginning of the year up until down 75%. How do you pick these winners? How do you pick these gems as an individual investor? We will be joined by Mr. Robert Yahweh on our Investment 101 to evaluate what are the price triggers when you're getting into and out of a stock, whether it's on the NSE or it's out of the NSE. We take a short break to look at the daily commodity prices. And remember, as always, we are streaming live on our Facebook page as well as on our YouTube page. That is Metropol TV. Not somebody next to you, WhatsApp somebody next to you, treat somebody next to you, engage with us and watch us. We will be back shortly.
There's no news story that is in touch with the needs of the audience like a business news story. Therefore, as a business anchor, it is in my mandate to understand the source of the story and, most importantly, consequences of the story. Which means before I take that script into my hands, I have to be close to the story. I have to experience the story, or simply, I have to live the story. It is Friday, the 5th of July, 2019. It's 1 p.m., so welcome to Metropol News at 1. My name is Nina Shaban.
And we are back, and it's a very exciting day on the Nairobi Securities Exchange. We've seen 5.4 million shares traded at Equity Bank, as well as 5.4 million shares also traded on KCB. A lot of activity happening on the banking counters over the day. For your information, 2 corporate actions have actually come through the limelight today. The first one, Equity Bank has relaunched its brand as it celebrates 35 years of operations in Kenya. A lot of excitement out there in the social media with regards to the new brand that seeks to actually combine all the entities that are operating under the Equity Group brand. And then secondly, NIC and CBA earlier in the day had an official launch of the merged entity. This entity has already gotten the green light from the Central Bank of Kenya. You will no longer hear of NIC and CBA. It will from here on be NCBA, a company that expects to see additional shares listed on the Nairobi Securities Exchange on or about 22nd of October. Over and above that, we are trying to look at our investments at an individual level. There are opportunities to look for price points where you can actually get into a stock and get out of a stock, and really avoid behavioral biases and tendencies that get you boxed into a space and miss out on opportunities. Mr. Robert Yahweh is the Managing Director of Snap Tech Company Limited, and he will be talking to us about Investing 101. Welcome to the show, Robert.
Thank you very much for having me.
All right. So today we're just trying to look at investing biases. I think when we were looking at the Nairobi Securities Exchange and really focusing on housing finance company yesterday during our show, and today focusing on NIC Bank, there were opportunities to actually make money. There were periods where both counters have actually made 75% in about 3 months. So I wanted to understand from your perspective, how do you look at it? Because I know you advocate for long-term investing, but how do you adjust this biases not to miss out on opportunities such as this?
As I've said before, people have different reasons for being in the stock market.
Okay.
Some are traders and some are long-term investors.
Okay.
Others are just speculators. So based on that, that's what will determine what your long-term strategy is.
Yes.
You mentioned NIC earlier, which seems to have shot up. But when I look at the graph, it was actually higher in March than it is today.
Yes, it is.
So if I took a position in March, I can't really...
You can't backtrack.
I can't exit today.
You cannot exit today.
Unless in June, July, when the price had dropped drastically, I had taken up, bought more shares,
yes,
which means that averaged downwards.
Okay.
Then maybe I could take an exit now.
All right.
Other people are just looking at making dividend. If only thing I'm doing is dividend return is what I'm looking for,
yes,
then I don't really care too much about the fluctuation of the share.
Okay, that's an interesting perspective, and I want to imagine that you must be very good at portfolio allocation. And I'm trying to understand, if I was a trustee and I've given you my funds, and yes, maybe our focus is dividend yields,
yes,
how would you reconcile the two? Because this is not something that happens every day, it was a one-off. Are there opportunities to avoid such biases in as much as you have a long-term horizon? Or how do you actually make sure that you're not missing out on opportunities, investment opportunities, or conversely being greedy for, for investment opportunities?
It's interesting when you say, for example, if I was a fund manager,
yes,
or I was a trustee. And that's one of the reasons why you do have people who are experts at managing.
Okay, expert advice.
Yes,
okay,
your funds. And I think I've raised it before.
Yes,
it's not having a CMA registration to
yes,
do that.
Yes.
It would be
risky
for me to do that. But
okay,
as an individual, on an individual level, you need to have a clear strategy.
Okay.
And I tend to use very simple examples, as you must have noticed last time.
Yeah.
We could both be in the chicken business.
Okay.
So for example, I've got a brother-in-law. He keeps chicken for the first 3 weeks, which is the highest risk time from day-old chicks.
Okay.
The first 3 weeks is when you're likely to lose everything. So his horizon is only the 3 weeks.
Yes.
After that, the value of that chick has actually gone up 300%.
Wow.
He then disposes off to people who are looking more for the long term, but they don't want the risk. So the same thing with shares. Why are you going in? Where do you want to go in and where do you want to go out?
All right.
If you have a strategy, for example, if my strategy was to exit NIC after I had grown 20%, then I would have exited the counter in March.
All right.
Because it had already most likely have achieved my objective. For somebody who's gone in June, July,
that's probably not the best time.
It might not be. His horizon might be different.
Yes.
And it's essential that we stop a sheep mentality, that one person tells us which direction to go in.
Okay.
Everybody needs to have their own individual strategy.
All right.
And objectives of when they're coming in and when they want to get out.
Okay,
yes.
So that makes sense. So in other words, what you're saying, even at a personal level, because I know at a corporate level, fund managers would typically have an investment strategy.
Yes.
And they'd have maybe an investment committee that meets often. So in other words, even at an individual level, I need to have my own strategy, whether preferably documented.
Yes, anything that's not written is not followed.
It's not followed.
Yes.
So I need to have an investment framework.
Yes.
An investment framework. And one of the considerations in this investment framework is what I want to put into my portfolio. Yes. It could be shares that are listed. It could be other things. But then the other thing I want to consider is what is my is it stop loss and stop gain, or how would I look at it?
Yes, you'd set what you want your stop losses.
All right.
So at what point would the share drop and then you'd want to get out?
Okay.
For example, for people who are in shares such as Mumias, many might have left ages ago.
Yes.
But others are
still holding on. When does your hope then become folly? And I'm not only talking about listed shares. It's also other unlisted. Because I'm trying to just, you see that behavioral tendencies tend to apply whether it's listed or unlisted. If I need to do my due diligence, if I will do my due diligence and look at public results on, say, Safaricom or the counters on the stock exchange, if you come to me as my uncle or my father and say, you have an investment, I should probably more or less follow the same mandate of doing my due diligence. Depending. So then when do you know that your hope is becoming folly, whether it's listed or unlisted?
Question. Are you holding one account or are we holding a portfolio?
I am, this is just investments. I want investments.
Yes.
So if I'm talking as Mbitha, I'm saying today, for instance, I have this amount of money, I would like to start investing. Before I start investing, maybe I've said I want a return of about 15%. Okay. 15%. I think the next thing I'd look and say, where can I get a return of 15%, give or take? It could either be on the stock exchange or outside of the stock exchange.
Are you going to actively manage this portfolio, or do you want it to be a passive portfolio?
What would you recommend? Now that's the next question I was about
How
to ask.
much time do you have
Depends.
every day
Depends.
to look at the market?
Should I be looking at it every day?
Again, depends.
Okay.
How aggressive do you want to look at it? Yes.
No, but I'm just saying, as a typical, I'm just a typical individual investor. Robert, just bear with me.
We can't have a typical investor.
Okay.
Because even twins born on the same day,
Yes.
a few minutes apart, can't have the same strategy.
Fair enough. Fair enough.
So your strategy is very different.
But how do I create my strategy, Robert? That's what I'm trying to
you
get
create a
at.
strategy based on, okay, this is the money I have.
Yes.
Okay. How much more do I want to put in every month?
Okay, that's a fair way of looking at
Okay.
it.
So as to protect your investment. And when do I want to exit? What's a condition of exit?
Okay.
Is my condition of exit determined by the market, or is it determined by an event in my life?
Okay.
So you might say that when you turn 40, you want to cash out.
Okay.
So that means that you have a time-based exit point. Second, you could say that once my portfolio grows by 20% or 50%, then I want to exit, irrespective of what else is going on.
happens.
So if that day was Monday this week, then you would have exited.
Which means I should have
Including
been
NIC.
tracking. I should have been tracking to see what's happening.
Yes.
Okay.
And part of what, for example, the My Stocks platform does is it allows you to have that done for you so that you can become an actively passive investor.
Okay. So you have technology that's actually working on your behalf all the time and
Yes.
sending you notifications.
Occasions when those conditions you want are met.
Okay, that's an interesting consideration. All right, then we're looking at the upside, the downside. You've mentioned Mumias. At what point do I've lost 5% value, I've lost 10% value.
Did you buy at 60 cents or did you buy at 40 cents?
When you lose value, you lose value.
It's
Okay, fine. Let's say I bought it at the IPO.
then today you'd have made money if you continued to buy more shares over time.
All right.
Yes, but if you stopped and you did what we traditionally do, which is what you said, the hard mentality, was you bought the shares and you thought they are title deeds for land, and you hid them away.
So don't treat them like title deeds.
They're not title deeds.
Hold on to that one. I like that thinking. We'll take a short break. The NSC has closed. Look out for the closing bell.
In journalism training, only 5 viewpoints matter for a proper story. My experience as a business journalist has, however, taught me that there is more. So now I understand that before I walk into that interview, I have to look for the hidden. So for me, what sticks is the story behind the story. What would you say is that unique, very unique selling aspect that you can guarantee I will not find anywhere else?
Good question.
My name is Ingrid Nantege, and this is Metropol Television.
And we are back looking at triggers for investments. For one, you need to actually have your own personal investment strategy. If it's not documented, it's hearsay, it's a dream, it's a fallacy. You must find a way to write it down. Some of the considerations that we were looking at just before we took a break from Mr. Robert Yahweh, well, the first thing, what is your stopgap, or rather, in other words, at what point do you want to exit? Do you want to be up 20% and exit? Do you want to be down 20% and exit this particular stock? Then now we were looking at other considerations. What was your point point of entry in these particular stocks? And we had taken an example of Mumias. Did you get in at 60 cents? Did you get in at IPO? Have you been buying additional stock?
Yes.
Let me bring you to another one, Uchumi, 28 cents. I don't know who's still holding on to it, but there are some people who are still holding on to it. And you did say you cannot look at stocks like a title did for land and put it in a drawer. Please elaborate this analysis.
Think of it like a cow, okay? You have to keep feeding it.
Okay.
And keeping on feeding it means you have to keep adding to your portfolio.
All right.
Just to stay, what we say is just to stand still. Because don't forget the value of money keeps reducing every day. So if you hold on to, if you bought Safaricom shares at the IPO and you never bought any more, you've actually lost value.
Okay, interesting. I'm probably one of them. How have I lost value if I bought it 5 shillings and it's now at 27?
What's the value of the 5 shillings you put in then today?
So the element of inflation.
Yes.
Okay.
So that's what you need to factor in. And that's why we say is that if you're going to put in a portfolio, make sure you can add another 10% or so every year.
All right.
Just to maintain your portfolio. And also it allows you to average down.
All right.
In the event that there are fluctuations.
Okay.
So if you do that over a period of about 9 to 10 years, you will definitely have seen a growth in the value of your portfolio, irrespective of what's been happening.
All right.
Yes.
Okay.
We keep jumping up and down. It's like getting concerned every time you have your heart rate goes up.
All right, fair enough.
And like you say,
maybe you are running.
all you did was see a nice pair of shoes.
Okay. When you put it that way, all right, now I understand.
So it doesn't become a crisis.
Yes.
That your blood pressure shot up.
Okay.
No, especially when you're aware of it. And that's what we need to understand is it's about long term. And we need to start putting in money away for the long term because we have lost our saving culture.
Yes, we have.
Today, you have organizations who will give you a loan having saved zero. So in other words, we've lost our our savings and credit mentality.
Yes.
We now have a credit mentality.
So now that's the SACCOs. Now they need to be called CACOs.
Yes.
Okay, credit associations.
Yes.
All right.
Credit and credit
associations.
So, and if we keep putting more money into the stock market, and then chances are we might then get most of our other companies looking at the stock market as a place to raise funds. The good thing with funds raised at the stock market is that they are patient funds.
Yes.
But until that happens, because if you look at it, the last 3-4 IPO'd companies have not done very well.
Yes.
Yeah. Because again, we don't seem to get an appreciation of what it means to be invested in the stock market. It's a long-term thinking. And what you're really doing is helping our corporates to reduce their debt burden.
Okay.
Therefore, they can then perform better when they're dealing with equity funds,
yes,
which are permanently in and don't need to get paid back every month.
So in other words, you're saying if I find an IPO opportunity today, I should probably give it about at least 5 years.
Yes.
Before I can start to get capital appreciation. But then in that duration, I still need to actively pay attention to what is management doing in case they change their strategy or in case the thing that actually pulled me to invest in the IPO changes.
Yes.
Okay, that's one side. So that's the Nairobi Securities Exchange. But the final question on that before we look at other asset classes, Nairobi Securities Exchange is almost at a 10-year low with regards to the NSE 20. And then turnover is not actually increasing. So there's not too much demand for stocks on the NSE. Should I be looking at these companies at this point in time, and what should be my 2 considerations if I'm looking at to get into the NSE today?
What's your exit horizon? 5
Well,
years? 10 years?
All right. Okay. Let's say we're working with 5 to 10 years.
Get in.
Get in. And
Yes.
what am I buying?
The question becomes, why is the market down? Do we have the same reflection with profitability?
No.
The profitability of our banks has been going up, but the share price has been going down.
Yes.
What does that tell you?
There's a mismatch with regards to perception.
So when you go in, you're going in because the company is a solid company, it's performing,
Okay.
and it's likely to perform well for the next 5 to 10 years.
So I'm really chasing dividend yield at this
Yes.
point in time.
Yeah.
If I can get a yield that's more or less that matches what the central bank is giving on T-bills.
Which will be difficult.
No, but the 1-year T-bill is now 9.7%.
Yes, I doubt any stock
They
gives a
are.
dividend of 9%.
Barclays is giving 8%
On what?
on dividend yield.
on what price? You see, you're looking at what price? Today's price.
You're looking at today's price. So you need, that's a good point. So you need to actually adjust your dividend yield calculation to your price of entry,
on what
your
is,
cost price.
What's your average price?
Okay, fair enough.
After you've done that.
Yes.
And again, the My Stocks platform does that for you automatically. So you don't have to think about it.
Okay.
So every time you buy
so maybe I'm failing because I've been thinking too much. I just need to let technology.
Let technology work for you.
My Stocks technology can work for me.
Can work for you.
Okay.
You put it in. Every time you buy or sell, we adjust it for you. So that at a snapshot, one screen, you can tell how your portfolio is doing.
Okay.
Yes.
And if that's only on My Stocks, what if I have real estate? What if I have fixed income assets? Are those amalgamated into what I'm holding on My Stocks platform?
We are working towards that.
Okay.
But the good thing is, most of the others are not that difficult to calculate. If you have real estate, already as an investor, if it's income real estate, you should at least do a valuation every year.
Okay.
Or every 2 or 3 years.
All right.
90% of us do valuations because the bank asked you to do a valuation, not for yourself. The valuation is for you.
All right.
And that's why a valuer gives you 3 figures. He gives you a market value, he gives you a replacement value, which is for insurance purposes, and he gives you a forced sale value, which is what the bank looks for.
Yes.
Because to the bank, they always look at the worst case scenario.
The worst case scenario, okay.
Now, to you as an investor, you want to know if you needed to dispose of that property today, what's the going rate?
So you also go for the forced sale value?
You can use the forced sale value, but you know what the spread is between the forced sale value and the market value. So you know whether the market value is inflated.
Okay.
Is it emotional? Is it an emotionally driven price, as happened in some areas, the Kileleshos and the rest, where people bought apartments at 18 million, 19 million. Today, the same apartment coming into market is at 12 million.
That's true. Okay. Interesting. I think you need to come back again. We are always learning something new. At least today, what we have learned, don't buy a stock and treat it like a title did. Yes. And in not so many words, you need to be more active, even though it's not every day looking at what you're worth, right? But as we come to the end of the show, is there anything else that we need to consider when you're looking at entry and exit points and price triggers when you're for any investment class?
Like again, I'll just repeat again, have your strategy.
Have your strategy.
Write down your strategy.
Write down your strategy.
And keep to your strategy irrespective of what noise you're hearing around.
Have a strategy, keep to it.
Yes, and ignore
the noise.
Ignore the noise.
Ignore the noise.
If you can do that, you will be successful in your investment over time.
Okay, and I suppose if you're not able to do it, maybe it's better to just look for a professional. Let's say when you want to pull out your teeth.
Yes, to a professional, or just give it to the government at 9% and go and see.
That was Robert Yahweh talking to us about our own investment strategies, or rather our own investment journey. It's pertinent that you actually document an investment strategy, which entails things such as when do I come into an investment opportunity, when do I exit, what returns am I looking for, what is my holding horizon, this and among other factors that you need to consider. Of course, if you can't do it for yourself, you should probably get somebody to talk to. Robert Yahweh would potentially be available to speak to. I'm sure he's on social media to get advice. It's better to get professional advice on how to think about it. Stick to your strategy and make an opportunity for yourself in the long term. Thank you for joining us once again. We'll see you tomorrow at the same time, 2:30. That's Markets Today on Metropol TV. Good afternoon.
Welcome to another episode of Street Biashara, where we get to learn all about business terms. My name is Brandon Michaba. Now, the latest reserves data from the Central Bank of Kenya in the month of August 2019 shows that CBK's reserves stood at $9.405 billion US, equivalent to 5.98 months of import cover. This was a fall of $85 million US during the week, having previously stood at 981.3 billion Kenyan billion shillings that represented 6.04 months of cover. Now, traders have attributed this to the recent slide in the shilling exchange rate to the dollar, which shot to the 104.20 level, a 4-year low, put pressure on CBK to sell some of its hard currency to the market to stave off volatility. Now, as you can clearly see, we're on the streets to try and find out what exactly you understand by the term Forex reserves. Well, let's go find out. Forex reserves. Heard of it?
No.
You want to try and tell me what you think it means?
Forex reserves could mean actually these are foreign currencies which have been put in place to cushion against the shortage of such foreign currencies. Yeah.
Does this term Forex reserves? Am I explain?
These terms are strange.
Just scare you.
Yeah,
you want to give me a guess? No?
They're hard.
It means the amount, okay, the amount our government, okay, the economy has outside the country. Yes, like maybe value, foreign value that is stored maybe in foreign banks or yeah.
Forex reserves. Okay, Forex, first of all, currency, the trading of currency and stuff. And then reserves, yeah, like, I don't know.
So what you're reserving foreign currency?
Maybe harboring it. Okay. Maybe I don't know it because I haven't dealt with it. I haven't met it anywhere. Maybe I'm just discouraged with the current economical climate. I don't know.
Forex reserves. You've heard of that term, right?
Forex reserves?
Yes.
Yes.
What do you think it means?
These are, well, I can say money or reserves held in foreign countries, in foreign banks. Yeah.
There's this term that we hear a lot.
Okay.
Forex reserves.
Yeah.
What is it?
Forex?
Reserves.
Forex reserves. Maybe allow me not to answer that one today.
You can just give me a guess.
Though I know this has to do with the money exchange. That's the capitation. Okay? The capitation on money exchange.
No, sijaisikia forex reserves. Forex is something to do with exchange of, but to connect it with reserve completely, I can't tell what it is.
Thank you so much.
Thank you too.
Njema. After getting the chance to go on the streets and get to find out what exactly you understand by the term Forex reserves, it's time for us to get a clear understanding from an expert. And the individual helping me with that today is the CEO of Infallible Group, Bide Mwema. Thank you so much for joining me on Street Biashara.
Thank you for having me.
Great. Now we're just going to jump right into the question, and you explain to us what exactly are Forex reserves.
Well, Forex reserve is the amount of hard currency, which is US dollars, that the central bank holds on behalf of the economy. So that would be all the amount of hard currency that the central bank is holding in its vaults or in equivalent on behalf of the nation of Kenya. This is an important metric because it is used to actually settle what we buy in. So if you're a trader and you're always importing things from China or from any other foreign country, you typically go to your bank and ask for dollars. So the person that supplies the banks with the dollars is the government. Or alternatively, the government could be going out there to buy oil or to pay for anything else that we are importing at a national level. So they will go to the central bank and ask for this Forex reserves to be able to pay. So in a nutshell, Forex reserve, it's dollar dollar currency or any other foreign currency that the central bank holds on behalf of the government or when the economy of Kenya to be used to settle obligations that are foreign to the country.
Okay, great. Now, how do forex reserves translate to import cover measured in months?
Measured in months. So what happens is every month you know how much you're going to bring into the country. Let me look at it like the way you'd look at a household. So every month I know I probably buy a crate of eggs, 10 packets of milk, etc. So I know how much I need to keep paying when I go to the supermarket. So what I typically do is I'll either go with my debit card or with my credit card, or I'll have money on my M-Pesa and say every month I use 10,000 to pay. So that's exactly what happens at a national level. We typically pay for fuel. That's the largest consumer of hard currency. Then even now, because the rains are not too good, we also import maize. And then we also import goods and services. Most of the industries in Nairobi now, I mean, entrepreneurs in Nairobi are always importing things from China. So they need hard reserves, hard currency to be able to pay. So when it comes to months, the government, or rather through Central Bank of Kenya, they will say this month, this is the amount of dollars that we need to pay for the things that we're always bringing into the country. So they compare the amount of reserves that they have, the total stock. So for instance, they say we have 10 units of US dollars, for example. But then every month we normally pay out 2. So what they would be comparing is 10 versus 2 to say we have 5 months of import cover. And it's a good benchmark so that you can know, are my dollar reserves or are my hard currency reserves declining? Do I need to increase, or do I need then to stop buying many things because then I don't have the hard currency with regards to cash flow to offset?
Okay, wow. Now, having said that, what impact did the recent fall in the shilling have on the Central Bank of Kenya forex reserves?
Okay, let me backtrack and answer that. So typically when you're looking at import cover with regards to forex reserves, currently we have about $9 billion that the central bank is sitting with in hard currency, in dollars mostly. And what it does when you compare it to the imports, it's about 5.9 times cover. So you're covered. Your monthly need for dollars is about 5.9 times over. That's what is sitting at the central bank. That's very good. And you know why? Because central bank, in its capacity as a banker of the government, has set for itself guidelines and said we don't want to go below 4. So if it's at 5.9, it says we are okay. Then also as part of the East African community, they have said, as all the central banks in the community, they've said we don't want to go below 4.5. So central bank looks and says we're at 5.9 versus 4.5, we are okay. So that's a very important metric to look like. Now, to answer your question on what was happening when the currency came under a little bit of weakness. Now, the currency, it's a commodity like any other. It's traded every day. What drives price? It's demand and supply. So what tends to happen during this period of time after the budget has been read, so July and August and September, then money begins to be released into the economy. Anybody who needed to have bought oil, if manufacturing companies needed to buy edible oils from other countries or inputs from other countries, now they have been paid by the government, and they're able to start demanding for currency to be able then to pay for their goods. So what we saw happening was just a little bit of volatility because now demand was on the increase. So the movement went from around 103 to 104, 104.5. It was shy of 105. But then now what happens when that happens is the central bank says we have 5.9 months of cover. So they start to supply dollars into the market. So it brings down, it corrects the price. So it came down to 103. So that really, the movement didn't have any material impact on the usable reserves that the government has. When you're looking at usable reserves, always look at what do we have. We're at 5.9 months cover. We need to be above 4 months cover. The better trend is to say what has been happening month on month. And then the final point on this is we bring in so much money from the diaspora. The diaspora gives us about $2 billion every so often. So this actually enhances what the Central Bank of Kenya has. So it's not necessarily depleted because what comes in is much less compared to what goes out. So that's the way to look at it.
Great. Thank you so much for that insightful information. I do hope our viewers do understand what the term forex reserve means, because next time I come on the streets, I will ask you this exact question and get to know if you remember it. Now, I'll see you next time with the next episode of Street Biashara. See you.
The largest value-added export of Africa is into Africa. 40% of what Africa sells to Africa has value added. Only 16% of what Africa sells to the world, of the rest of the world, is value added. And that means a purposeful political engagement to address simplification of cross-border movement of goods and services, liberating the movement of labor, opening up and investing in new service industry is going to lift Africa's possibilities. But it has to be done with political attention to detail. Secondly, Africa does not invest in its digital economy. I started an initiative with Alibaba, with Jack Ma of Alibaba. We've been taking some young net entrepreneurs to Hangzhou campus to learn how to build electronic market visibility. And it's working. It's already working wonders in Rwanda. But I need political leadership to take responsibility. I need African financial services to start looking at how do we cross the border of the unknown and invest in digital startups. As bankers, you look at what is your credit history, what is your capital stock. How do you ask those questions to a tech startup? Their main stock is in their heads, and their capital is in their laptop. How do they access credit in the normal way? Abnormal times require that financial markets also start doing abnormal things to finance the next drive of Africa's growth. One of the main things that are going to hold us, keep a positive momentum, is how we ride out short-term uncertainties. As a country, for example, Kenya is grappling with the challenge. We drove the East African integration, but we have seen a steady erosion of Kenyan market share in the East African market. Okay, it may be interesting that we're now looking at possibilities of cross-border economic zones with Ethiopia. It's good to be innovative and look at new ideas. But I think going to new battlefields without trying to diagnose and understand the reasons of failed battlefields does not represent progress. You must ask yourselves, what is it we didn't do right in the East African space that we want to correct when we go into a relationship with a country which still has an Exchange Control Act? Meaning, they can take in money, but you cannot take money out without central bank permission. An area without a minimum wage law, meaning in labor-intensive manufacture, Kenya can never compete with Ethiopia. The average wage is less than 1/3 of the minimum wage in Kenya. What is the comparative advantage that Kenya brings to such a zone? Or is it a shipment of made in Ethiopia into the Kenyan market? Those are challenges that are difficult, but they must be addressed politically.
Why is it important to start your business fit? Because business is demanding. Your body needs to be ready. Successful business persons always stick to health first before the money. So join me, Douglas Karanga, on Shape Up every day at 6 a.m. on Metropol TV.
Macadamia originates from Australia, where it was discovered by a colonist in Queensland, Australia in 1857. Macadamia derives its name from John McAdam, an Australian statesman and botanist. It was introduced to Kenya in 1945, but was not popular till after independence, when various small-scale farmers started to plant the crop. Macadamia trees commonly grow up to 20 meters high. They have shiny leathery leaves that are 20 to 30 centimeters long. Fragrant pink or white flowers are borne in clusters and are succeeded by bunches of up to 20 fruits. The fruit consists of a fleshy green husk that has spherical seed inside. The spherical seed hosts nuts that are round with a surface that is smooth and are 1.3 to 2.5 centimeters in diameter. The shell is tough, fibrous, and difficult to crack. The nut is white with uniform quality that shrinks slightly after harvest. The nut is white in color and is a rich source of fatty acids, protein, iron, vitamin B6, magnesium, which is required for enhancing metabolism and strengthening of bones. Macadamia grows well in an altitude of between 1,500 to 2,000 meters above sea level. And it requires rainfalls of between 700 to 2,600 millimeters per annum, with optimum temperatures of 15 to 29 degrees centigrade. The soil should be deep, fertile, well-drained loams or sandy loams with a pH value of 5.5 to 6.5. It is propagated mainly through grafting, as trees grown direct from seeds take up to 7 years before they start to yield. It is advised that you plant the trees with a spacing of 7.5 to 10 meters by 7.5 to 10 meters. Therefore, an acre of land will hold up to 70 trees. Some grafted varieties start to yield within 2 to 3 years. After flowering, it takes 6 to 8 months to mature. Then ready nuts are harvested, husks removed, and dried within 24 hours of harvesting. Well-kept trees produce up to 80 kilograms per tree. And in Kenya, macadamia is mainly grown in Kiambu, Murang'a, Meru, Embu, and parts of Rift Valley. What sets you out from the rest? What makes you stand out? Get the most outstanding and credible business information only on Metropol TV, Kenya's first business channel.
To another exciting, educative and intriguing episode of The Hustle. This week we bring you all the way here in Lakisima Estate in Ruaraka constituency, and we get to meet a talented and seasoned carpenter, a very curative one. My name is Tabitha Muthoni. Join me as you get to learn and learn more. Kenya's forestry sector is central to its economy and its future. 5 key forests regulate 75% of the country's renewable water supplies, while more than 80% of the energy generated in Kenya comes from wood. Besides energy, businesses such as carpentry rely on wood. However, according to Gatsby analysis on the Kenyan forestry sector, Kenya is only able to meet about 70% of this demand through sustainable domestic supply, where the annual deficit of 12 million meter cubic is met by formal and informal imports, plus unsustainable extraction from natural forests. This shortage has led George, a graduate, to combine both wood and steel in his carpentry and interior design hustle. George, you are a very talented and a seasoned carpenter. A very creative one, I've seen from the designs that you have shown me from your phone. But before all this glory, before you got to where you are now, tell us your story. Who is George?
George Muganda is a young Kenyan, very obedient, God-fearing, law-abiding citizen. I come from a very humble background, and my father died late in 1995. So it was the responsibility of a single mother now to take care of the other siblings. So I struggled to go through school up to university level, where I graduated on 2016. So from there, when I was in school, I thought of having business ventures, because you cannot wait for employment. So employment gets me on the way.
What did you study in university?
So I studied crop protection.
Crop protection?
Yeah, Bachelor in Science, crop protection major.
Wow.
Yeah, so I'm a crop protectionist by profession. But now this is a side hustle. It is developed out of passion. I had passion in furniture, fittings, finery. I had passion in it when I was in school. During holidays, I could do this. So I learned this through my brothers who were doing it.
They were carpenters, yeah?
Yeah.
From having all this passion for furniture, understanding carpentry, how did you start your journey?
Actually, having passion in this business, I had some little capital, 30,000.
30,000?
Yeah. Wow. So I thought of getting a small shop where we can do the furniture. So I looked at some market gap. It was the time of bed bugs, you know, kunguni.
Yes.
So generally I started doing the metal, wooden. You know, when you have metal and wooden, the rate at which the friction, no, the bed is intact.
Yeah.
So I thought of that because people were throwing their wooden furniture,
sofa sets,
yeah, because of bed bugs.
tables.
So I thought of the first thing I will make will be a bed composed of metal and wood.
Wow.
And it is working from 2016 up to now. It is working, and you can see customers
You
coming.
actually started in 2016?
2016.
With 30,000 Kenya shillings. So where was your first spot? Is it here in Lakisama? Where did you set up your business?
Actually, I was looking at a place where we can get a space, but generally because I stayed in Lakisama, I knew the geographical background of people around, people I can interact with, people I can sell my idea. So I decided to do Lakisama because, you know, when you are in a campus, out of campus, you don't have maybe money for fare. So I just walk from my house to this place. Yeah, maybe if there's a customer who maybe can come late, I can open the shop maybe at 7 p.m. and release maybe an item.
So you graduated in 2016?
2016.
Yes,
December.
and December. And
but this job I started it before I graduated.
before you graduated,
January.
yeah. And so far, have you gotten any job offers?
Actually, I've not gotten a permanent one. But, sometimes I go for contract jobs when there is IBC, such like even the government internship. I applied, I went for the interview. I was shortlisted, I went for the interview, we are just waiting for the reply. So this contract, I do go, yeah.
All right, so 30,000 shillings, you have put up your business, but what did you start by buying? From acquiring a space, a workspace, getting the raw materials, where did you start?
Actually, the place I started was getting the place. You know, you have to pay rent.
Yes.
Some
you need
deposit.
To have a workspace.
A workspace, that is the most important thing.
Yes.
Then you can make a stool. I just made a small stool to tell people that there's some people here.
Wow. You started by making a small stool, a carpenter's vision.
Yeah.
Wow.
Small tool. And you know, when you are starting a business, there are a lot of challenges. You know, people don't know who is this person. Maybe this tool stayed here for about a week before it was sold. So you have to be patient enough. Kuvumilia.
Yeah.
Yeah.
All right, and let's come to your raw materials. I've seen that you have a lot of wood. Actually, wood is very expensive in the country right now. There's a lot of nails. You have a lot of nails, pia magunia. But where do you get your raw materials from?
From this place, we get raw materials from Kariobangi. Not so far.
Yeah, not far from Lakisama.
Yeah, it's about 150 if you take a boda.
Yeah.
Yeah. Some like material, we get them as far as from Kikomba. Yeah.
So in Kariobangi, what do you get from Kariobangi?
Kariobangi, we get the timber. These paints, thinner. Most of the raw materials, when you go to light industry, they're there.
At a very fair price, at a good
we
price.
Have some in the local hardware, but you now consider the price. And we are working for the middle earners and low income earners, so you have to maximize on what you are producing.
What designs do you have? Let us first begin with what you are making. I've seen sofa sets, beds. What else are you making?
Yeah, we make the metal things when you have a bathroom rack. You know, it's a new fashion, and the ladies will prefer to have a bathroom rack where you place your soap, you can place everything you want. So this interior design, these small things, you have footrest. We do also fitting in the rooms. We do fittings in the rooms, these wardrobes, and what have you, high levels. We do them.
So I can actually call you into my house, you come, fix everything.
Yeah, even if you want maybe to have some repair in your house, or maybe you want to fix some new things in your home, it is far away, we can provide those services. We go, maybe if it is Homa Bay or maybe Muranga, we can go and fix the yeah.
All right. And so besides doing the interior design, you can make something out of the blues, like a shoe rack or what is this called? A bookstore where I can pack my bookshelf. Yeah, bookshelf it is. So can you make something out of the blues? Anything that the client wants?
Yeah, actually, most of the clients know in this era of new technology, we don't just dwell on the local things.
Yeah.
They Google and find other items in Nigeria, Egypt. As long as it deals with furniture, with wood, we sit down, we look at it, and we make it. We can make you a shoe rack, a modern one, rotating. We have a shoe rack, which I showed you. It is rotating at 90 degrees. When you close it, it looks like maybe a wardrobe, but it's a shoe rack generally.
Yeah, when you open it, it's a shoe rack actually.
So we can
in
make
the
you
inside.
something very classic. Maybe if you have to take a wedding gift, you can take to your friend something very unique, which is not common.
You tailor make.
Yeah. So actually, what is important, you must have the information. In this era of technology, you benchmark. You look at what people make in other countries, what other carpenters are doing outside, because there are new
designs coming up, new inventions.
New invention coming up, so you don't just make local things altogether. That is what will bring competition
in the industry. Yeah. So have you tried coming up with your own designs? Like someone tells you, nataka kabati. Have you tried to improvise or rather come up with your own design and sell it out there?
Yeah, we have come up with several designs. The shoe rack design, the table design. Some of them we just come up with, and maybe we put them for display. A customer buys it, the other person comes, I want like that one. So it becomes marketable. Yeah.
And how have you handled competition, looking at it that